Beginner's Guide to Investing. Turn $500 into $5,000. Investing may seem like a game reserved for the wealthy, but the truth is that anyone, even with just $500, can begin their journey toward building wealth. While it may not happen overnight, turning $500 into $5,000 is possible with patience, strategy, and a willingness to learn. This beginner's guide will help you understand how to start investing smartly and how to grow your initial capital tenfold. Why investing is better than saving. Many people park their money in savings accounts, where it earns minimal interest. While saving is important for emergencies, inflation erodes the value of your money over time. Investing, on the other hand, allows your money to work for you and grow through compounding returns. The earlier you start, the better, even with just $500. Step 1. Set clear financial goals. Before jumping into the investment world, take a moment to define your goals. Are you investing to buy a car, start a business, retire early, or simply build wealth? Your goals will influence the types of investments that are best for you. Also, determine your investment timeline. Short-term goals, 1 to 3 years, will differ in strategy compared to long-term goals, 5 to 10 plus years. Step 2. Understand risk and reward. Every investment carries a degree of risk. High-risk investments can offer high rewards, but can also lead to losses. Low-risk investments are more stable, but yield smaller returns. As a beginner, you should be honest about your risk tolerance. If losing a portion of your $500 would cause serious financial stress, you may want to focus on safer investments. That said, turning $500 into $5,000 will usually require taking on moderate to high risk, especially if you want to achieve this in a shorter time frame. However, that doesn't mean reckless gambling. It means smart, informed investing. Step 3. Explore the best investment options for beginners. 1. Stock market. The stock market is one of the most common places to grow wealth. While $500 won't buy you a ton of stock, you can start small using fractional shares or commission-free trading platforms like Robinhood, Whipple, or Fidelity. Start with ETFs or index funds. These are baskets of stocks that mimic an index like the S&P 500. They offer built-in diversification and are great for beginners. For example, if you invest in an S&P 500 ETF like VOO or SPY, you're effectively investing in the 500 largest companies in the U.S. 2. Robo-advisors. If you don't want to pick individual stocks, robo-advisors like Betterment or Wealthfront can create and manage a diversified portfolio for you. You simply input your goals and risk level, and the platform does the rest. 3. High-growth tech or penny stocks, advanced strategy. For those with a higher risk appetite, investing in emerging tech companies or penny stocks could offer big returns. However, this requires careful research and a willingness to lose your money. This approach can help you reach $5,000 faster, but it's also the riskiest. 4. Cryptocurrency. Crypto is volatile, but it has made many small investors wealthy. With platforms like Coinbase or Binance, you can buy fractional amounts of Bitcoin, Ethereum, or emerging altcoins. If you time the market right and invest in a coin with real-world utility, $500 could multiply significantly. Caution: crypto markets can crash dramatically. Never invest more than you can afford to lose. 5. Peer-to-peer lending. Websites like Lending Club allow you to lend your money to individuals or small businesses in exchange for interest. Returns can be higher than traditional savings or CDs. The risk is also higher due to potential defaults. 6. REITs, real estate investment trusts. If you're interested in real estate but can't afford to buy property, REITs allow you to invest in real estate through the stock market. They often offer regular dividend income and are relatively easy to invest in with little capital. Step 4. Build a strategy and stick to it. Once you've chosen your investment vehicles, you need a strategy. Some options include buy and hold. Invest in strong assets and hold them long-term. This is great for stocks, ETFs, and crypto. Dollar cost averaging. Invest a fixed amount regularly, $50/month. regardless of market conditions. Reinvest profits. If you earn dividends or profits, reinvest them instead of cashing out. This accelerates compound growth. Let's say you invest your $500 in a diversified ETF that grows at an average annual rate of 10%. If you add just $50/month, you'll reach $5,000 in about 5 years. Step 5. Educate yourself continuously. The best investors never stop learning. Read books like The Intelligent Investor by Benjamin Graham or Rich Dad Poor Dad by Robert Kiyosaki. Follow finance blogs, watch YouTube channels on investing, and join investing communities on Reddit or Facebook. The more you understand how money and markets work, the smarter your decisions will be. Step 6. Avoid common mistakes. Here are some pitfalls beginners should avoid. Chasing get-rich-quick schemes. If something sounds too good to be true, it probably is. Investing without research. Always understand what you're putting money into. Panic selling during market dips. Market volatility is normal. Don't let fear ruin your long-term gains. Ignoring fees and taxes. Some platforms charge fees that can eat into your returns. Also, remember that capital gains are taxable. Step 7. Scale your investments over time. As you become more confident and your income grows, increase your investments. Set a goal to invest at least 10 to 20% of your monthly earnings. Even small, consistent contributions can grow into significant wealth over time thanks to compound interest. Don't stop there if you manage to turn $500 into $5,000. Use that experience as a foundation to build toward $50,000 or even $500,000. Final thoughts. Turning $500 into $5,000 isn't a fantasy. It's a realistic goal if approached with discipline, patience, and knowledge. The key is to start small, stay consistent, and never stop learning. Investing is not a one-time event. It's a lifelong journey toward financial freedom. You don't need to be rich to start, but you need to start to become rich. Let me know in the comments section below. What do you think of our video? If you enjoyed this video, make sure to hit that like button. Also, subscribe to our channel before you go. Thank you for watching.